Hey, I'm Jay Royster, and today we're at HillRock Estates meeting with Mark Ethridge of Ascent Real Estate Capital. He's going to tell us all about this unique project, so let's go check it out.
3, 2, 1.
Here we go! So here we are at HillRock Estates, a 341 unit multifamily deal. Mark, thanks for sitting down with us today and talking with us about it.
Yeah, absolutely, Jay. Thank you.
So before we get into talking about the deal and how creative it is that you all bought this and the way you financed it and kind of your platform and what you all do, tell us a little bit about yourself and your background in commercial real estate.
Sure, yeah. So I'm from Charlotte originally and knew I wanted to get into real estate probably from the time I was either a senior in high school or in college. I think growing up here in a fast-growing city, you just kind of get attracted to wanting to shape how development occurs. And so I had dreams of working for a development company once I graduated. Unfortunately, the financial crisis coincided with my years in college, and so I came out of school in 2010, and the development companies weren't hiring. And so I got into brokerage for about 18 months with a small group, and then really I feel like my career started once I got into the capital markets in 2012. With a group that was then called Capital Advisors, now Bellwether Enterprise, and had a great experience there for about 5 or 6 years. Dealt with almost every property type in commercial real estate, structured a lot of debt, did a little bit of equity, and just learned a lot about how the numbers work behind these deals. And two really important things happened when I was there. One was I met John Dixon and Aaron Ligon, who are now my partners at Ascent. And the second is I ended up financing a lot of these older, what we sometimes call B and C apartment properties. And for whatever reason, about 5 years ago, I just got really into them, almost obsessed with kind of, where the rents were, who owned them, what was happening to them, how they're being financed, and how that related to this broader affordable housing conversation we were having in Charlotte.
Yeah, absolutely. So let's talk about this deal. You all bought this in the fall of last year, fall of 2020, in partnership with Roof Above. So maybe you could tell us a little bit about Roof Above, who they are, as well as how you all put this deal together with Roof Above. Very creative financing, as I mentioned. Atrium Health is actually providing financing on this deal. So I think that's pretty unique and rare that the region's largest healthcare provider is getting involved in a real estate project, and there was obviously several private donations, private donors as well. But tell us about Roof Above and how you all found this opportunity.
Yeah, absolutely. So Roof Above is actually a combination of two predecessor organizations, Urban Ministry Center and Men's Shelter of Charlotte. And both of those organizations have served folks experiencing homelessness in Charlotte for the last couple decades. They merged 2 years ago, became Roof Above, and really served to not only treat people experiencing homelessness on a day-to-day basis in terms of services, but also to get them housed. And so they had done some housing work in the past, but this NOAA concept was new to them, and it was something that we had been working on. We'd bought a deal before this, kind of showed that you could buy an existing apartment property, put deed restriction on it, still has some cash flow available to satisfy whatever, financing that you had with it, and preserve affordable housing along the way. And so I was a board member at Roof Above, actually grew up, knowing about and volunteering with the organization, had a conversation with the CEO, Liz Clayson Kelly, and one of the board members, Gary Chesson, with Trinity Capital at the time. And we kind of came up with this idea that they had raised a lot of money to help house people coming out of chronic homelessness. They were having a hard time doing it the way they used to do it, which is building projects from the ground up. And we kind of came up with this working theory that we could buy one of these old apartment complexes, and as units came available through natural attrition, move in folks who've experienced homelessness and make the numbers work. And that idea happened kind of in late 19, and then by February of 2020, we had this one under contract, and for a lot of reasons, it was the perfect fit.
So let's talk about how you make those numbers work and the financing. Fannie Mae is providing $31 million of debt for this project. The City of Charlotte, the Housing Trust Fund, is also providing funds for this. So how do you begin on a complicated deal, so many layers of debt, how do you begin to evaluate and underwrite this?
Yeah, it's really hard, and obviously the market's been really competitive. I can't imagine a property type that's more competitive right now than these older apartment complexes, especially in markets like Charlotte. So the cap rates are really low, the prices are really high, And most people can afford to do that because they're going to buy something and raise the rents. We don't do that. We actually do the opposite. We buy something, we hold the rents flat for a lot of the units, and then in this case, we're actually moving rent significantly down on this subset that serves these folks coming out of chronic homelessness. And so it takes a pretty complicated capital stack. You're right that Fannie Mae gave us a $31 million loan. I think it's got 12 years on it. We locked a really good interest rate at the time. It's below 3%. Whenever you're in affordable housing, Fannie Mae gets really friendly with things like interest only. And so we're not paying amortization for, I think, another 5 years. And so that helps to make the numbers work in these early years. We got City of Charlotte financing, which we've done now a couple times on these NOAA properties, and that really helps because it's essentially a 0% loan that rides above that senior debt piece. And then Atrium came in, which was a surprise to me, but not a surprise to the folks at Roof Above who knew that Atrium had made a commitment to investing into affordable housing. They saw the intersection between housing and healthcare, wanted to contribute, and so they ended up giving us a $5 million loan at 1% interest. So you add up all of those really cheap sources of debt capital, leaves you with a tranche that is the equity portion. And what was really innovative about this deal is instead of taking LP equity that needs a return, we took donation money from Roof Above and plugged it in as equity. And instead of paying a return to Roof Above, we actually recycle all of that cash flow and it turns into rental subsidies that essentially buys down the rents for those folks coming out of chronic homelessness. And so it's a crazy model. I've seen precedents in a couple different places across the country that look like this, but I don't think there's a deal that exactly looks like this anywhere else in the country. And so it's something that we're really proud of.
Yeah, that's quite the pro forma and very, very creative and unique. So kudos to you all for figuring that out. But you're helping place homeless people here and help them really get rehabilitated in some ways. But there's also, there's different layers of affordable housing. You cater to 60%, 80% AMI. Can you talk about that a little bit?
Yeah, so we're big believers in the mixed income model. And so we don't want to concentrate a property with folks making 30% AMI and below. We think that more social capital, more upward mobility happens when you have people at various incomes, various stages of their life cycle in terms of kind of career fulfillment and other things, living at the same property.
So Mark, with so many stakeholders involved between your firm, Ascent Real Estate Capital, you have Roof Above, Atrium, your other partners in the deal, what's been the most challenging aspect or what have been some of the hurdles so far in this project with so many stakeholders involved?
Yeah, well, I think your question is the answer, and that's we're trying to accomplish a lot here on a very large property. And so, we had bought at a 100-unit property that had 3 affordability levels without some of these specific programs like we have here, and that's run pretty well. We bought this, it's a large property, 341 units, 20-something acres, a $50 million asset. We have 5 different affordability programs, 6 floor plans, we have 3 different renovation conditions. And so just the decision tree that our property management team has to go through when a prospect walks in the door or a unit comes available is pretty pronounced. And so it's been a steep learning curve for us to get kind of our operations down, learning how we efficiently lease to 80% AMI, 60% AMI, Roof Above clients as well as Atrium teammates who we have a specific referral process for them given their financial commitment to us. And so we're finally hitting our stride about 8 months into the deal, but it's taken about that long for us to get there.
Yeah, the level of complexity from a leasing and operations standpoint is just so much greater than a normal acquisition deal with private capital.
Yeah, and the truth is a lot of our property management teammates come from conventional apartment backgrounds, right? And so when they start working for us at our properties, they're learning affordable housing, compliance, restrictions, and leasing for the first time. And it can be a challenge. I would say it's a lot easier to lease a market rate unit than it is an income qualified, deed restricted unit. And so it's really rewarding, but it takes some time and some education. And I'm happy where we are today, but certainly it's taken a lot of work since August.
Yeah, absolutely. And not only since August, but your commitment to getting into this product type really for at least 5 years. And it sounds like you were volunteering even at a younger age.
Yeah, it's pretty cool. Actually, my dad was the chair of the board at Urban Ministry Center. My mom helped start the art program. And so when we bought this deal, it really felt like a big moment for me just because my family's been involved in the organization and has cared about this cause for a long time. And I really credit my partners, John and Aaron. I mean, this is a very interesting, complicated deal. We're essentially signing ourselves up for a quarter-century partnership with Roof Above to operate this asset in a model that, like we've talked about, hasn't really been done before. And so we could do a lot of things in real estate, and they support me in doing ventures like this, one for the community good, but also because we think it's a good business model for us. And so I'll give them a lot of credit for supporting and growing this platform, and also, taking the plunge to enter into a partnership like this.
Yeah, in 25 years, that's a long horizon. That's a little longer than your normal exit strategy. So
yeah, I joke I'll be, I may be a grandparent by the time I'm still out here, picking up trash and trying to help out around the property. So it's interesting, but like I said, it's a location we really care about. I live about a mile and a half away in Plaza Midwood. It's a gorgeous property, and we want it to serve, this mixed income population for decades to come. And so it'll always be important to us, and I think that'll make the work fulfilling.
Yeah, it really is a beautiful property, and it was built in 1989, so I'm sure there was some deferred maintenance when you all purchased it, but what are some of the upgrades that you all have planned, or what are you really allocating your capital towards?
Yeah, so we identified a little over $1 million of stuff that we wanted to fix within the first 6 months, and we're concluding that work now. And so that involves things like siding repairs, handrail repairs, grinding down sidewalks, parking lot and asphalt repairs, drainage work, a lot of kind of meat and potatoes rehab stuff. And it's interesting because when you look at our CapEx schedule versus that of like a value add multi-buyer, we focus a lot more on the outside of buildings because that's what pays dividends over a long period of ownership. Because we're not increasing rents, we're not as interested in splashing in new countertops and new cabinets when they're not needed. And so we want our units to be safe, warm, dry, and clean. Since we're not chasing rent dollars, we're not gonna go purposefully try to upgrade things when they don't need to be replaced. And so you see us working on the outside of buildings a lot. You see us doing things that most owners won't do. And it's been good work. It's been very well received by the residents. Certainly, to have an ownership group come in, not be chasing rent increases, but also to go out of their way to fix things that have been, lagging at the property for a number of years. I think it's a good story to tell, and certainly it's been responded to well from the residents here.
Yeah, it is a great story to tell, and I'm glad that the residents are receiving it well, because I think it's also been received really well in the community and by the real estate community as well. Let's zoom out from this project though for a minute and really talk about the affordable housing conversation as a whole. Why is it important to implement strategies like this for naturally occurring affordable housing as opposed to just new construction affordable housing? That process going through the state with the LIHTC, that can be a long and drawn out process, and it's like even when those units are brought online, it feels like they're making a really small dent into the overall affordable housing need. You see a project that's 100 or 200 units, and just in Charlotte there's a 30,000 unit need. So why is it important to implement strategies such as this for projects like this?
Yeah, so what I learned in the last 5 years is that I think going into 2018, we were building about 312 units a year of affordable housing in Charlotte. And that's because LIHTC deals are long, complicated, and they typically are smaller in size. And so to meet a deficit of 30 or 34,000, we needed to bolster that effort. Now fortunately, a lot of developers have come to the table and then leveraged more dollars to get that LIHTC number up closer to 800 or 1,000. But the truth is 82% of folks making below median income across the country live in private, unrestricted housing. And right now in Charlotte, for every new affordable housing unit that we build, we're losing more units when properties like this get bought and upgraded and the rents increase to where they're no longer affordable to folks making 80, 60, 50, and 30% AMI. And so we have to have both. And so I am really excited about what we've done. This project was a launching pad for us to prove that it can be done in a very complicated manner, serve a wide range of needs, and also be done on a large property. And part of what happened when we were closing this is we got introduced to some investors in town who are interested in making an impact, wanted to see this NOAA preservation platform grow, and ended up leading to what's now called Housing Impact Fund, which is a $58 million fund that we're a part of that's out to acquire about 1,500 more units of properties like this in Charlotte over the next 2 years. And so I really hope that that sets a precedent for this community to not only take as much advantage of LIHTC as we can on the new construction side, but also preserve NOAA, because I think the combination of the two is actually gonna make a substantial impact in reducing the deficit of affordable housing that we have.
Yeah, and let's talk about that fund that you all launched and now have closed out. You launched that fund after this project, and what does that tell you really about capital? You've got some pretty significant players that have invested in that fund, but what does it tell you about the capital that they're looking to deploy for a return? It's a for-profit fund, but also with a little bit of a philanthropic element.
Yeah, I think it's really interesting. I mean, you know, if I heard somewhere that philanthropy has always been 2% of our GDP for as long as anyone can remember. And obviously we still have a lot of problems in the world, even with all those philanthropic dollars going. And so we have to find some other way to channel more private sector capital into altruistic things. And in my opinion, the way to do that is not to get people to write more grants, but to get people to write more money that may have a return profile that's just a little bit different than market-based investments. And so that's what Housing Impact Fund is. It's a 20-year fund with a 6 to 8% return profile. That's about half of a normal return you'd get on a real estate deal, and it's about 3 times as long of a time horizon. And so it's certainly not for everybody, and it's not for folks who aren't diversifying in other ways. But for people who want to make an impact in affordable housing, it provides another vehicle outside of just writing a grant to do something that has as much impact and as much mission as anything that a nonprofit would do with grant money. And I think it's really exciting, and truthfully, we've seen new investors come to the table that I don't think have participated in affordable housing in the past show up because, one, they were attracted by the precedent of deals like HillRock, and 2, that return profile to at least get their money back in 20 years with some interest ahead for inflation kind of opened the door for them to maybe invest some money that they normally otherwise wouldn't have. And so I think there's a lot of promise for this social impact sector, especially in markets like Charlotte. We really haven't had it in the past, and I hope that Housing Impact Fund is the first in many successive funds to come.
Well, Mark, thanks for having us today, and look forward to continued success for Ascent Real Estate Capital, and it's really special what you're doing to highlight the affordable housing product type here in Charlotte.
Yeah, thank you. We appreciate you all shining light on us and are really excited about the future.
Great. Thanks for watching, and if you're interested in keeping up with the latest developments in Charlotte, make sure to like and subscribe.